Asian stock markets plunged today with Russia's invasion of Ukraine, and we expect ripple effects around the world. Craig Bolanos, founder and CEO of Wealth Management Group, is with us this morning. Craig, good to see you. Good morning.
Yeah, good morning. Good to be back, but it's going to be a tough day in the market as we're going to open to the downside as these geopolitical tensions have boiled over and have investors as nervous as a long-tailed cat in a room full of rocking
Yeah,
chairs.
so let's talk about that, Craig, and what that means for you and I. A lot of people are watching their 401k right now and their investments. What should we be doing or thinking about when it comes to our portfolio?
Well, I think rule number one is don't panic. And that's easier said than done. I acknowledge that. But investors have lived through skirmishes, crises, invasions, wars. These things have happened before. And I think people really need to take a look at the bigger picture, remember why they're investing. And again, just don't panic. And there's evidence that too many people are panicking this morning on the opening bell.
That said, Craig, are there trade risks right now?
Well, certainly there's risks. At the end of the day, there's the human story, but this is ultimately a story about inflation, interest rates, and uncertainty. And clearly the higher energy prices that we're all going to be dealing with, the higher food prices that we're going to be dealing with, that's the inflation story. So the consumer is going to have to spend a little bit more money on those items, and we're going to have less money to spend on the fun stuff that we all like to pursue. That's meals and entertainment and travel and leisure. But the reality is, I think what's going to happen is we're going to have some pain in the market as prior geopolitical events have shown. But eventually, people are going to look back to earnings, payrolls, jobs. And the good news is the U.S. economy is coming into this crisis with a decent level of health.
All right, very good. That is great news. When it comes to borrowing money, we know that the Federal Reserve is planning to raise interest rates next month. What do you think the impact of that could be?
Well, the nice thing is the Fed has telegraphed far in advance, and markets really have an expectation. Coming into the office this morning off of last night's news, I don't think the Fed is going to be raising rates 50 basis points. That's off the table as a result of the actions overnight. They're going to raise rates a quarter. And really, as long as the Federal Reserve is very measured, data dependent, rising interest rates do not necessarily need to derail the economic growth that's happening in the United States. But certainly we all have to expect some slower and more tepid growth, because anytime we've had rising oil prices, rising energy prices in the past, that has acted as a tax on the American consumer.
Really interesting that you say that. So is the window closing, you think, Craig, on a good time to take out a large loan or a mortgage? Or are we okay for let's say, the rest of the year?
Well, it depends on your perspective. I know there are people watching us right now who remember mortgages that were back in the teens. I think of my first mortgage that was 8 7/8. That would be heresy by today's standards. But if somebody had a home equity line of credit, somebody had a mortgage they were trying to get, the time to lock in the rates would have been 6 weeks ago, which means to those watching, go get your rate locked in today, not tomorrow, not next week. You got that one spot on. People should lock in because rates are going to trend higher throughout the course of this year.
Got it. Really, really good advice and information to know, Craig. Founder and CEO of Wealth Management Group. Really appreciate your time. Thank you so much.
You're welcome. Back to be with you.
All right, back with more after this.